Today on Fear and Greed, the most expensive home ever sold in Australia finds a buyer with very deep pockets. Bad news for Labor and the Greens from elections in Victoria. And it's Superbowl Sunday in the US, and the 30-second ads are going for $8 million a slot. Plus, Domino's closes a bunch of stores and corporates pull out of the country's biggest carbon trading scheme. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 10th of February, 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, the country's most expensive home, an estate in Toorak in Melbourne, has sold for $150 million, an absolutely staggering price, beating the previous record, which was in Sydney's eastern suburbs, by $20 million. So it didn't just beat it, it demolished the previous record.
The 1867 built Coonac, C-O-O-N-A-C, owned by Paul Little, he of Toll Holdings fame, and wife Jan Hansen, who's the Chancellor of the University of Melbourne. They've sold it to someone, we don't know who the buyer is at this point, but they got $150 million. It's described as an Italianate mansion, 1.1 hectares, pool, cabana. Never really known why cabana is such a selling point in the house. But anyway, a pool, cabana, tennis court, park-like gardens, 200-metre frontage on Clendon Road. Those who know that area knows that's a place to be in Toorak in Melbourne. Now, Little and Hansen paid $14.5 million in 2002. They've renovated it, according to the Financial Review. Now they're getting $150 million for it.
Not a bad return, is it? That's pretty good.
The previous Melbourne record was $80 million for another property in Toorak. That property's actually been knocked down and is being rebuilt. The previous record for a house was $130 million for two different properties in Point Piper in Sydney's east. The actual apartment record is higher, or was until this weekend, was higher than the house record. The apartment record is $140 million. That's for an apartment, a penthouse and a sub-penthouse in Barangaroo, which is in Sydney CBD. That's only just been completed, and that's a mystery buyer as well. Anyway, the upshot, Michael, a cabana. Is a cabana really a selling point for a house?
Well, I suspect that's what helped it to beat the Barangaroo apartment, because I'm tipping that apartment didn't have a cabana.
No. Might have had a pool, though.
Oh, that is just incredible. Just staggering numbers, and I can't wait. I hope we do find out who the buyer is, because I'm
sure
very,
it'll leak.
I'm
sure
very, very nosy, Sean. It's good to see the top end of the market doing so well. But, Sean, what about the rest of us? We know that the market ended last year just a touch soggy, really.
Soggy? Yeah, that's a good word for you.
It's a very visual word, isn't it? Any pickup in 2025?
Well, a little too early to tell, but there are some positive signs. There was a bunch of homes that went under the hammer over the last week, up to about 1,700, I think. The preliminary clearance rate came in at 67.4%. That's the highest since October, so we should be excited about that, I'd imagine. CoreLogic's Tim Lawless said the early trend is showing an improvement in selling conditions, which might reflect some renewed confidence as the likelihood of interest rate cuts grows. Now we'll find out more about whether or not we're going to get an interest rate cut next week when the Reserve Bank meets. The Melbourne early clearance rate was 68%. Sydney came in at 73%. But the numbers are relatively low. 1,700, well, Sydney and Melbourne at times have that many in their own cities, 1,700 across the country. Not a huge amount of selling going on, but at least the early signs are positive.
Got to say, it's been a pretty good week for Melbourne over Sydney, hasn't it, when you think about the NFL games to be held at the MCG? Big announcement last week, now taking out the title of the most expensive property in Australia. Good week to be a Melburnian.
It is, unless you're a Labor Melburnian, but we'll get to that in a moment.
Very, very good point, and great tease, Sean.
Yes.
Just lure people through. Local markets, how did they finish up on Friday?
The S&P ASX 200 closed down just a touch to 8,511 points. It was a bit of a mixed day. The big banks were higher, so too the big miners, but CSL, Macquarie, Wesfarmers, Aristocrat Leisure, all lower. After all the Trump-related headlines last week, it was actually a fairly quiet session. Of note was Domino's. It was the best performer. Share price up 21%. We'll talk about that in a moment. Collins Foods, owner of KFC, also did well, rising more than 12%. Energy and healthcare stocks were among the worst performers. Transurban and Telstra were also lower.
And what about international markets? Much going on?
A fair bit of economic information out of the US. So data shows unemployment in that country at 4%. Basically, the labour market's solid, I suppose. I mean, it's a bit like here, solid. That suggests a good basis for economic growth without too many inflationary pressures, kind of a bit Goldilocks, really. Economists said that supports the idea that rates in the US will be on hold for the time being, which is what the US Fed has said in the past fortnight or so. Markets don't like that. Markets want rates to fall, or at least equity markets want rates to fall. So the fact that that unemployment number came out at 4% pushed the S&P 500 down 1%. Tech-heavy Nasdaq fell by almost 1.5%. Not helping were comments from Donald Trump that he plans to announce reciprocal tariffs on many countries early this week. That weighed on markets. Not exactly clear what he means at this point, but the administration has been upset about the European Union's value-added tax, which it's had for many, many years. That's a minimum of 15%. So the idea is that potentially there will be a 15% tariff on EU products. Other data over the weekend shows that consumer sentiment in the US fell and worryingly inflation expectations soared. Otherwise, Brent crude trading about $75 a barrel. Gold's about $28.60 an ounce. The Aussie dollar's just under 63 US cents. And Bitcoin, $97,000 a unit.
Sean, I should have mentioned this before. We've got a great interview coming up after the show. Speaking of local markets, you're talking to Anna Milne from Wilson Asset Management. This is all ahead of reporting season.
Yeah, so we've got some great stocks kicking off today, like JB Hi-Fi reports today, for example. So we talked to Anna about which sectors look interesting to her and which ones don't. And we actually talk about consumer discretionary stocks like Wesfarmers and JB. So if you're interested at all in investing, particularly earnings season, this one is a must not miss.
A must not miss? That's changing it up from a must listen.
Yeah.
Feels like it used probably about 2 extra words, but anyway.
That's all right.
The thing I love about Anna's interview is that she just goes through the stocks that she is watching, the ones that she is keeping an eye on, and names, which we love, isn't it? It's always great, particularly if you are interested in investing. Don't go anywhere. We've got plenty still coming up. We're talking about Domino's big announcement that you alluded to before. Sean, why big companies are quitting a federal net zero scheme, and a great story about copycat cryptos. I love that one. It's all coming up shortly. We'll be back in a moment with the rest of the day's business news. Sean, Labor and the Greens have suffered major swings away from incumbent members in 2 Victorian by-elections, auguring pretty well for the federal coalition in the upcoming federal poll.
In Paran, it appears that Liberal candidate Rachel Westaway has won the inner Melbourne seat away from the Greens for the first time in a decade, and the formerly safe Labor seat of Werribee in Melbourne's west last night was too close to call, with the Libs in the running to win it for the first time since 1979. Probably will stay with ALP, but a very close run thing. Certainly bad news for Jacinta Allen's Victorian government, but also for Prime Minister Anthony Albanese. There was a 10% swing against Labor in Werribee. If you replicated that across Victoria in the federal poll, which is due before the middle of May, you'd end up with the ALP losing 11 seats. Now, it's not going to happen, but it's just an interesting exercise. It shows that Victoria's 39 seats in the federal poll are well and truly up for grabs. Victoria is no longer a Labor stronghold. I think that's what we can read out of those results over the weekend.
Yeah, and you can imagine that the federal parties would be watching this so closely. And you would think if it was all of a sudden just a resounding win for Labor, then the potential for the election to be called very quickly would kind of increase. But now it might be like, okay, all right, we've got a fair bit of work to do between now and who knows when, in May perhaps.
Maybe. Yeah, I think it's been a bit of scuttlebutt over the last few days that there won't be an election before the end of April or May, and that the budget will be handed down at the end of March. So that's what the betting says at the moment, but who knows?
Who knows? Now, we've mentioned We've teased Domino's several times now, Sean. And the company is closing more than 200 stores as it looks to reduce the number of loss-making restaurants and really try to placate disgruntled investors.
Yeah, so Domino's, believe it or not, has 3,800 stores in Australia, New Zealand, Europe, and Asia. The bulk of the closures, 172 of the 200, are coming from Japan. Japan has been a real disappointment for the chain for a while. 4 in Australia will close. It's one of the first moves by new CEO Mark van Dyke. Now, the old CEO and founder Don May famously expanded Domino's. He didn't like closing stores at all. He liked opening stores. That was the basis of his strategy. Now, in the last 12 months, he has had to reverse that just a touch, but he also has stepped down, and the new CEO has come in and wholesale closes in Japan. As a result, investors love that type of stuff, and it's the share price actually jumped. It soared. It was up about 23% at one point last Friday. It's still down about 8% over the last year or so, but it's interesting that the new guy is coming and, no problems at all in closing stores.
Yeah, I suppose it's less about kind of the number of stores that are being closed and more about the big shift in strategy, isn't it? That it's suddenly that it's not so much, we are not just about this aggressive growth. It is about perhaps being more strategic now in the ones that are allowed to remain open.
Yeah, Domino's wanted to have 7,100 restaurants around the world by 2033. So what's that, 8 years' time? That's 40% more than what they've got now, but they're actually going the other way. So I think they've actually dumped that whole idea of having 7,100 stores around the world.
Yeah, huge. Now, Nick Scali reported on Friday, and boss Anthony Scali was very upbeat about the retailer's push into the UK, saying that its sofas and swivel armchairs are being bought up by English shoppers. A swivel armchair? You look like a swivel armchair kind of guy.
Don't you think it'd be great to have a swivel armchair? Just that it goes circles?
The day you get one in the studio, that'll do me. You'll just be sitting there, just reclining in your swivel armchair, just turning around like Mr. Burns.
Yeah.
Sorry, go on.
Nick Scali posted a small loss for the December 6 months, but investors liked what they heard and the share price jumped 12%. Retailing is a consumer discretionary stock. Now, Nick Scali is one of the first consumer discretionary stocks to report. Those companies have done really well on the ASX this year in anticipation of a strong earnings season. We talked to Anna Milne from WAM about that in the discussion after the show. Nick Scali certainly didn't disappoint on Friday. However, the boss, Anthony Scali, did say that trading was very volatile week to week in Australia and New Zealand. So it's not all good news.
It wasn't even so much Mr. Burns. It's more... Do you remember Inspector Gadget? It was
Were you listening to that report?
No, I wasn't. No, I really wasn't. No. I was just trying to remember who it was that really kind of sits in the chair and turns around. And there's a combination. Dr. Claw from Inspector Gadget.
Yes.
Dr. Evil from Austin Powers. And also the original kind of bad guy from James Bond, Blofeld.
Right.
Ernst Stavro Blofeld.
Right.
Remember him? Like the bad guy stroking the cat?
Yes,
no?
yes. I do know, yes.
Yeah, the original bad guy. Anyway, yes, you could be any one of those in your swivel armchair. That's my point. And so I'm sorry for not listening to you.
That's all right. Let's get on with it.
Some of it, this does not sit well with you, does it? Some of Australia's biggest companies, including Australia Post, Canva, Telstra and PwC, have quit the federal scheme that allows them to claim net zero carbon emissions amid mounting integrity concerns, Sean.
Australian corporations have spent hundreds of millions of dollars in the past decade buying offsets in the voluntary market to reduce their climate footprint. But according to The Age, there are rising doubts about whether the projects generating these offsets actually reduce greenhouse gases. More than 100 companies have left the climate active scheme in the past 2 years, with the damaging corporate departures prompting the federal government to consider radically reshaping or even shutting down the so-called voluntary market in carbon credits. Climate Active is a federal government-run voluntary register that companies join to report their carbon emissions and the offsets they're buying so they can claim to their customers that they're actually carbon neutral. That's how it works. But a lot of companies are walking away from it. including Australia Post, Cbus Superannuation Fund, Telstra, NRMA, Canva, PwC, even the Clean Energy Finance Corporation, which is the federal government's $30 billion green bank, has pulled out of Climate Active. Not a good look.
That is not a good look at all. One last one, Sean, before we get to international news. Woodside Energy's boss, Meg O'Neill, has come out swinging against the Victorian and federal government, saying that it is too late to avoid an economically damaging gas shortfall in Victoria.
She blamed a decade of political opposition to the fossil fuel industry. O'Neill believes it is too late to avert a shortfall as developers such as Woodside remain wary of the Victorian government's sceptical attitude towards the fuel source. I quote, "Ideology has stood in the way of sensible energy investment in times of crisis. Things can move quickly. We'd like to see them move before you actually get a crisis." The comments underscore the expectation that Victoria, Australia's most gas-dependent state, will be forced to import LNG in a move that could add to short-term price pressures, according to a report in The Australian.
Okay, turning to international news, and I mentioned this story in passing earlier, Sean. Donald Trump's new cryptocurrency has sparked a flood of imitators, with more than 700 copycat and spam coins sent to his digital wallet by people apparently seeking to suggest that their creations have the president's endorsement.
Opportunism at its finest.
The did not findings, waste any time.
No, the 700 copycat and spam coin, that was found as a result of a Financial Times analysis after the president and his wife Melania launched meme coins in the days ahead of his return to the White House. The FT found that 736 different meme coins have been deposited in the official Trump coin wallet over the past 3 weeks. Among them, nearly 200, including official Trump and official Melania, are named after Trump or members of his family, but have absolutely no connection to the president. After the real Trump coin was launched, the first so-called copycat coin was minted within 30 minutes.
Oh, that is efficient. Give that man a job with Elon Musk in the Department of Government Efficiency. This person can move quickly.
So meme-coin creators are taking advantage of a function in Solana, which is actually the blockchain that underpins Trump's meme coins. It allows users to dump new coins into someone else's wallet without needing permission. So they're all, of course, dumping them into Trump's wallet and hoping that not that he will endorse it, that people will think he endorsed it, and as a result, make some money out of it.
People can feel free to dump anything into my wallet. My wallet is alarmingly empty.
Go right ahead.
Sean, it is Super Bowl Sunday in the US, and the game kicks off later this morning in Australia. It is being held in, do you say New Orleans or New Orleans?
New Orleans.
Oh, you're. I suppose you lived in the US for some time. And did you go there?
Yeah.
Did you?
Great place.
Oh, it does look amazing. Anyway, it's being played by between the Philadelphia Eagles and the returning champs, the Kansas City Chiefs.
Who cares who's playing? I mean, let's face it. It's all about, halftime entertainment.
Halftime, yep.
Kendrick Lamar, he'll be good. Taylor Swift will be there. I mean, her boyfriend, Travis Kelce, is playing for the Chiefs, the Kansas City Chiefs. So, was it last year that she flew back from Japan to be there?
Yeah.
Maybe. I think that was it. It's Super Bowl 59. 10 advertisements have been sold for more than $8 million each, according to Variety. Wow. Incredible. Stella Artois has one, which involves David Beckham and some sort of long-lost brother, American brother, whose name is Dave Beckham, played by Matt Damon. So Stella Artois is using David Beckham and Matt Damon in the same ad. There's also ads by Haagen-Dazs, Hellmann's Mayo, website builder Squarespace. Donald Trump is due to turn up. No sitting president has ever been to the Super Bowl. Fox has the rights to the show. I suppose in terms of the football, Kansas City is going for 3 straight. That's never happened before. The two teams played 2 years ago. Kansas won that one. If they've got a quarterback, a guy called Patrick Mahomes, who is sort of the great quarterback of his era. And I suppose if they win 3 times in a row, he'll quite rightfully claim that, Michael.
I love that you actually did manage to squeeze a little bit of actual sport into the end of that story. It felt almost begrudging.
Yeah. No, I mean, I'm sort of an American sports fan, so I felt I had to drop something in there.
Yeah. But really, for most of us, it is about the ads.
It
and
is about the ads.
halftime show.
Yeah. Totally.
Okay, up next is Fear and Greed, the week ahead with our resident economist, Stephen Koukoulis. He's always very excited. He's got plenty to say today. And after that, stick around for the Fear and Greed daily interview, Wilson Asset Management's Anna Milne ahead of reporting season. The stocks that she's keeping an eye on, they are both coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It is Monday, the 10th of February, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.